Hello there. In this video today we're going to be talking about the basic accounting equation. In order to understand the accounting equation, it's important that you recognize that there are 5 different categories of accounts, and the accounting equation is the relationship between those different accounts. The full accounting equation will include all 5 accounts in the equation, and the basic one is only going to be looking at 3. So when you're talking about this, we have, like I said, 5 accounts. The first one is your revenue accounts. This is your income, the income you earn. You also have your expenses, and these are the costs involved in running your business. Then you have your assets. These are your items of value that you own. You also have liability accounts. That's amounts that you owe to other people or other enterprises. And you have owner's equity. Now, owner's equity represents what the business is worth to the owner at any point in time. Now, the reason that we have these accounts is so that we can organize our information in a way so that it makes sense to other people. And that's one of the reasons I like accounting so much, because I really like organizing things. And accounting involves organizing financial information into a way so that it can be interpreted by others who need to make decisions about the business or to evaluate the business's performance. So like I said, these 5 accounts all relate to each other. And when you are dealing with accounting, you will end up getting your books to balance, which means that one side of the business's records will match the other side and they will be equal to each other. And that's really important because if you make a mistake, say you forget a 0 in one of your numbers, that will be picked up because both sides will not balance. So in order to make that work, in order to make our books balance, we need to have an understanding of how these accounts all relate to each other. Now, like I said, the full accounting equation will use all of these accounts. In this video today, we're just going to be doing the basic accounting equation, which means we're going to be looking at these 3 accounts and how they relate to each other. So, what is the basic accounting equation? Well, the basic accounting equation means that everything you own, so all of your assets, these are the items a business owns. Everything a business owns is equal to what you have borrowed. So we would call this liabilities. This is amounts owed to others. So these are amounts owed to others, whether that be other businesses or other individuals. Everything you own is equal to what you have borrowed plus what the owner has contributed to the business, plus owner's equity. And this is going to be the owner's contribution, so what the owner has contributed. So think about this from an individual's standpoint. If you are saying that you as an individual own a house, so say this is your house is equal to what you have borrowed from the bank plus what you have contributed yourself. So let's just go through now the other ways that the accounting equation can be expressed. So it can be expressed in 3 different ways because you can rearrange the accounting equation mathematically. So let's do this again. So remember, we said that the assets are equal to, so everything you own is equal to what you have borrowed plus what the owner has contributed. That's the first way that you can represent this accounting equation. Everything you own is what you borrowed plus what the owner has put in. But you can also rearrange this mathematically because I can get either one of these things on the other side by moving it over. So say I want to have liabilities on its own. I want to find out what is owed to other people. Remember in algebra, what you do to one side, you do to the other side. So if I minus owner's equity over here, that cancels this out, and then I can minus owner's equity on this side. So now my equation would be liabilities is equal to assets minus owner's equity. And when I learned algebra in school, the way that we actually did this equation is we used to circle the numbers and do an arrow over to the other side, so that what you do to one side, you do to the other side. So now what we have is the amount that I borrowed is equal to the items I purchased minus what I have contributed. So again, think of this in a more individual standpoint. Pretend you're wanting to buy a car. That might come up for you pretty soon. The amount that you have to borrow is equal to the car's value, because that's an item of value. So motor vehicle is a business's an asset of a business. So this would be the value of the car minus the money that you have to contribute. So say you're looking at a car that is secondhand and costs $6,000. So you want to get a $6,000 car, and maybe you have $4,000 worth of savings so far. So minus your $4,000 in savings, that's your contribution, the owner's contribution then. So the amount then that you would have to borrow is the $6,000 minus the $4,000. So you'd actually have to borrow $2,000 for that car. Now the other way that we can rearrange this equation is the most common way actually of seeing this, and that is having owner's equity on its own. So if we go back to this original equation that we had up here, I'll just fix that up now and rewrite the original way. So with our original way, remember, the way before we had assets is equal to everything you own is equal to what you have borrowed plus what the owner has contributed. Now remember, what you do to one side, you do to the other side. So if I want to get rid of liabilities here, I would subtract liabilities on this side and it would cancel out and move liabilities to this side. Or the way I was taught is, I'll just grab a different colour. What other colours do I have here? I have a blue. I would move the liability, and we used to do an arrow to that side, and it moves it over and makes it a minus now. So we would minus liabilities on this side, minus liabilities on that side. This would cancel out liabilities, and you'd still have assets minus liabilities on that side. So that's just basic algebra. Hopefully you know that already. And here we would have owner's equity is equal to assets minus liabilities. This is a really common way that you'll see the basic accounting equation written. And what this means is what the business is worth to the owner, what the owner has contributed, is equal to everything the business owns minus what it owes to other people. So think about this now as, we could even go with the house example that we had before again. What is the house actually worth to me? Well, what the house is worth to me, my investment in the house, what it's worth to me if I was to sell it, is equal to the value of the house, the item of value, minus my mortgage. So mortgage is a liability, minus the mortgage there, and that would represent what my investment in the house would be, the house's value minus what I owe in terms of the mortgage. So another way I like to think about this is a balancing scale. If you imagine a balancing scale, you would have assets on one side, and then you would have owner's equity plus liabilities on the opposite side. And when you look at the accounting equation this way, you can see that all of your assets are the same as your owner's equity plus your liabilities. And you might be thinking, why bother doing this equation? Well, like I said before, remember that we want to show if we've made any mistakes. And I can really easily see that now, because I can look at my assets and make sure it equals to all of my owner's equity and liability accounts added together. And if it doesn't, I've made a mistake somewhere. Maybe I forgot a zero on one of those numbers. Maybe I classified one of the accounts incorrectly. But it is a way of me checking to make sure that I have entered numbers and everything like that correctly. The other way of thinking about this, when you're trying to really quickly write the accounting equation in those three ways, is assets is the largest number. So assets is on its own, and owner's equity and liabilities is on the opposite side. So when you're looking at that, if you want assets on its own, you add the other two numbers together. If you are trying to work out one of these numbers, you're going to have to subtract, because assets is the biggest. So it's going to have to be owner's equity minus assets equals liabilities, or owner's equity is equal to assets minus liabilities, and you'd see it written in that way. So I hope that this has made it a bit more clear for you in understanding the accounting equation. And if you are interested, check out the next video where we're going to go into the full accounting equation. Thanks for listening, guys, and I'll see you next time. Bye.